Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Happy Synthetic Friday. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, and Dennis Dick with you this morning. On our radar, we have a number of earnings to discuss, some unusual M&A in the cannabis space, and we want to talk about the biotech wreck that happened yesterday. Our guest is Marc Chaikin. He will join us at 8:15. He is the founder of Chaikin Analytics. In the meantime, Joel, what is the word here on the overnight session?
We're green by 2.25 handles here at 29.0275. We had a little dip overnight, got just below Friday's low, but a nice rebound. Pre-market high stands at 0350. Not much on the upside here. I'm looking at a daily number at 0750, and then a couple closes in the high close of the move. Let's just call that whole congested area 2910. That's an area of 3 closes. Gold in the green by $1.40, 1278.20. Still trying to get over that former support, new resistance now. Crude taking another shot at that 64, 65, 70 area. There must be 6 highs up in that area as well. Silver in the green by 1.6 cents at 14.955. Triple D, how are you doing? Is Spencer just talking options here on this Synthetic Friday?
Yeah, I know. It took me by surprise. I was like, oh, this is option expiration today, because normally, obviously, it's on the third Friday of the month, but we don't have a third Friday. So we're going to have on Thursday here today. So your options expiration is expiring today, which means we're going to have some wild moves, usually on the open and especially on the close. So be prepared for a little more market volatility.
Yeah, and we have that, and then we have 420 on Saturday. So we got some pot stocks moving ahead of that. You want to start with that sector, or would you?
Start with the pot stocks, and it's a merger that's really driving the sector here. Although they're cooling off here, they were hot last night when Canopy Growth announced some stuff. Let's go, Spencer. What's the news here from last night with CGC?
Well, they didn't announce it. It was just a report. But I'll back up a couple of days, and we'll go back to Tuesday. Because
Sure.
On Tuesday, the Canopy CEO was at a conference. He gave some updated guidance and also said, hey, we're acquiring this licensed producer from Spain. That was Tuesday. Yesterday, reported that Canopy has also agreed to acquire Acreage Holdings. And hold your thought there, because this morning, Acreage Holdings says we are buying Deep Roots Medical for $120 million in stock and cash, and they only have like $75 million on their balance sheet. So lots of M&A here. Canopy is
buying everybody.
Everyone's buying everybody, yeah.
It's interesting. And you made a good point there when we were just talking about five minutes ago, Spencer. It's interesting that, here's an acquisition, and a lot of other sectors see the acquirer go down. And in this case, you saw the acquirer really rally last night. I mean, it's come off the highs, but we got up to how high did we get last night there, Joe? I thought I saw $47 on
over
CGC.
$47 here. I got a high of $47.87.
Wow. Of $5 they bought this. Okay. Too much, too fast. It's $44.80 now. So if you're buying at those highs, it's 3 points off the highs already. So it looks like a good day for CGC. This is not that good of a tape after hours here, though, because it has leaked 2/3 of the gains back. That's always concerning. So I'd say, if you're ready to party in the streets here, just wait a little bit here, because this is still leaking here. So it's not like it's going up. This has been coming down, since like 20 minutes after they announced this.
Daily highs to contend with here, since we are now back under $45. 2 levels to keep an eye on: 45.25, your March 25th high, and then things open up to 46.14. But usually when you get this pop and then the pullback here, it's gonna take some big buyers to get it back up to 47 and change. But not quite sure I understand all the acquisitions and everything what's going on here, acquiring the acreage. But it's not me to understand. It's just me to analyze the price action. And you got it trading up here by $2.15 at 45 even.
And Acreage
And every other stock was trading up last night on this too. They have all leaked as well. Kronos is trading up 2% still. ACB, if we go to Aurora Cannabis, it's the only one I own for full disclosure. It's up 1%. Afria was getting a lift. Afria had a rough day yesterday with that offering.
Yeah.
It's come back here this morning. It's up 4%, trading at 817. And even Tilray, which has been the dog of the sector forever, it's up a little bit. It's up 40 cents. So not getting as much lift, but it's the dog.
Then Acreage is OTC. There's two tickers. It's ACRGF and ACRZF, I believe. But that's an OTC stock.
So jumping back into these stocks, Joel, what do you think about? You got 420. You've had some life here. If we go 3-4 days ago, they were all starting to look like they were going to roll over. Not so fast. They're all starting to look a little bit healthier here. Break down the CGC.
CGC, I mean, it's had pops and drops before. It kind of looks like it's coming out of a long not a long, but you made that low under $40. Looks like you had some accumulation under 41 here. So, I mean, you're ways away from, that 39 and change low. So if you're buying up here up $7 and you're leaning on that low, quite a bit of downside there. Just trying to recover. I mean, actually, it had a really good month in, what was that? In February or January, March, and April. Not so good, but it looks like it's on the recovery. It's hard to figure retracements here because, you're not really at the all-time high and you don't have a major low. So let's see what it does today. It's kind of hard to buy it.
Important day.
Yeah, important day.
Because we had such a large after-hours range. Can this start to, climb back up and get up, in the 46, 47 area again? Or does it continue to leak? Those are the questions to be answered here. So we're trading 45 kind of in the middle of it here. Hard to really get a feel here. You really, if you look, the last 3 months are between 40 and 50 or 45. You're right in the middle of it.
And
yeah, hard to really, get convicted in either direction here. I feel like it's in the middle of nowhere.
And if you look at the big move here, they are, off the high from 59 and a quarter down to 30 and a quarter, boom, there's basically a 30-point down move. And you have been over 45. You've been below 45. So I think it's just going to settle here around this, consolidate around this 45 area. It holds 45 over the next couple of days. And I can't see why it won't go back up and test those highs in the 50s. On the other hand, if you can't hold 45, then go down and back and test the lows. But really in the middle of nowhere.
Joel, I would like your thoughts on the MJ. I almost bought this in October. I didn't, and then I forgot all about it. So give us a breakdown.
Oh, it's not a bad point. I mean, where you're at, you're building some daily support here. I know you're looking long term here, Spencer, right? So if you're
longish,
so 3 lows in that. I mean, looks like Institute. I don't know how much institutions trade this, but good support under $34. You got 3 lows in that area, so that could be the sign of some accumulation. But an area to lean on definitely for a swing trade, and kind of looks like the CGC chart as well. But shorter term, I don't like it trading up today. I'd like getting under $34 would be a better or lower risk trade, but.
It's going to open up because it's obviously full of CGC and all these stocks that are trading up this morning. So it's probably going to open somewhere between 34.50 and 35. But you know what? You get those triple bonds to lean on. Sometimes, it's a lower risk trade. This is what I did yesterday in Lyft, LYFT. I was looking at the chart and I was like, you know what? I got a lower risk entry here into a pretty wild stock. And what I was looking at was the low from the 15th was 55.56. The low, 2 days ago, 56.18. And then it was flirting around 56 again. I was like, you know what? If this puts in a triple bottom here, maybe it has a chance to reverse. So I picked some up, and here it is 5 hours later after I pick it up, and it ran up $3. So I'm long LYFT right now, just for a short-term trade. Was leaning on those lows. I would have stopped out if we would have cut through the low of the move at 55, say 50. Maybe I give it a little bit of room, like 55 and a quarter. I would have got stopped out. I got close to getting stopped out yesterday because I bought it in the 56 handle, and then it dipped down to 55.62. I was like, oh, it looks like I'm going to get stopped out, but I did not. And then it turned around on a dime and kept rallying all day, consolidated for a little bit in the afternoon, and then rallied into the close. And it's up here again this morning, showing a little bit of life. I will probably, and you're looking at risking $1, and I'm up, almost 3 points in it. So I'll probably ring the register if this thing gets in the 61, 62 area, just because the risk reward is there. So if it does, get up over 60 here today, I'll probably definitely raise my stop up, and if not, just ring the register. But little trades like that, little setups like that can work for you sometimes. So when you got 3 areas to lean on, and I mean, this is what we talk about. Trying to buy a stock that's going straight down is one thing. It's a hard thing to do. When you get 2, 3 lows in the same area, well, maybe you can have a level to lean on then. And I always say you can put any trade on as long as you have an out. And this typically isn't one of my trades, for swing trades, because I usually like the stocks trending up. This was not, but I just had a level to lean on, and I played with it that way.
And where did you get it at? 56 and change?
56 and change, yeah.
Yeah.
And then it went down, but it went down like 50 cents after I bought it, like quickly, 50, 60 cents. So you can see, probably where I was like, somewhere, 5, 10 minutes after the open, maybe 15 minutes after the open, when I was looking at it. And then it leaked down, and I was like, oh, I am going to get stopped out on this. But then it turned around. So, you have your stops there, you have your outs. Sometimes they work, sometimes they don't. I got lucky I didn't get stopped out. And, now I'm up almost 3 points in it.
Let's see here. 59.61. That was your high from yesterday. 59.80 is your 3-day high. So, boom, get into that 60 handle, Dennis, and things open up to 60.
Yeah, what are your thoughts here?
Yeah,
I mean, raise up the stops. Like I've always, and this is one thing. I do very well in my short-term trades, my scalps, my efficiency trading. The swing trading, I feel like I do okay with it, but I feel like I can improve. I feel like I sell stuff too soon. Typically, is usually my mistakes. Even in some of my investing, the ones I don't touch, I do well on. But I tend to, as a trader, I tend to probably sell stuff too soon. What are your thoughts here? Like, what's the way to play it? So you're setting up 3 points in a stock like Lyft, which is very wild. I mean, it's headline, an analyst comes out and downgrades it on Monday, and I could have all the losses gone, or if it upgrades, it could be up another $3. It's going to move. We have some IPOs coming as well. What are your thoughts here, LYFT, on how to protect these profits? First question to you, Joel. And second thing is, a target here.
Well, you don't want to be too close with the stops, right? Because
you got to give it some room.
Yeah, you got to give it some room. So even if you said, move it up to like the $57 area.
Yeah, like move it up so it's never going to become a loser.
Exactly, unless you have something happen overnight. But so best trades are ones that you could just move the stop ups safely, and and just see what happens and not get taken out of it. To me, I'd like to get it over $60 today. Just that high from yesterday, 59.80. Then things open up to 61.49. You can see the daily highs here. I mean, if you could stay in this for a while, let's say it finds support at the next whole number. I mean, you came down from you've had like a 33-point decline here. So 16.65. I mean, if this thing really gets, I wouldn't be surprised to see it go to 70 or 71.
Yeah, and that's obvious. I'm not probably going to be hanging out that long because it was such a short-term trade. It wasn't like I stuck this in my investing portfolio. I was risking $1, a little over $1, really. And you look at it now, and you're up 3. It's like I've already got the 3-to-1 risk reward here, pretty much done, and that's what I like. So, it was almost an excuse to ring the register yesterday. But I often like when you see an outside move, I talk about the follow through. So I'm already leaning on, maybe get a little follow through at the open. Johnny come lately saying there's life there, and maybe selling into that. But again, it might be a better play to raise the stop here too. So right now it's leaking in the pre-market though. So as I talk, I better stop talking about it because it keeps going down. It was 59.80 when I started talking about it. It's 59.30 now. So let's stop looking at Lifter. I'm going to have to sell it right now.
You put in hard stops on those, right? Or do you use mental?
Depends. I did yesterday on Lyft. The only reason was I couldn't pay attention to it. So, when I get too much going on, it's a wild stock. I had a hard stop on it yesterday. I typically use mental stops, though. If I'm at my desk and I'm not busy doing other stuff, I'll use mental stops. I just don't like having my stops on the book. I know Interactive Brokers is pretty good. If you're using IB, they keep the stops off the exchange. So they keep it within their own internal system so nobody can see it. Like, and there's always been the question, who can see the stops? They're not supposed to be nobody can see it. But there's also people who can anticipate where the
There you
stops
go.
are, the stop hunters. But I don't totally trust all these exchanges either, that some people can't see the stop. So that's kind of why I like to keep it, if you can, keep it just mental, or keep it, at least, in your own internal system, as opposed to having it sit on the exchange and maybe somebody can see it and then run your stop.
All right, it is 8:15. I am calling Marc Chaikin, the founder of Chaikin Analytics. He joins us every other Thursday.
Good morning.
Good morning, Marc Chaikin. What's shaking?
Aha.
Yeah, sorry. I'm sorry. They put me up to that. These two put me up to that. I'm sorry.
I'm sure he's heard
That's all
that
right.
times.
Heard it before.
All right, how's it going?
It's a good one.
The IPO market is heating up. This is insane what's happening this morning, in my opinion.
Well, we're getting Pinterest and Zoom later today, but what IPOs are you watching? Because there are a few that are running here.
I'm watching those and the way they price them. Zoom had a range of 28 to 32. Then they were going to do it 32 to 35, and they priced it, I think, at 36 or 38. And Pinterest was priced at 19, above the range. This is insane. The market is frothing up, which is good in one sense. It means that there's a lot of confidence out there, but I don't like this trend in the pricing on the IPOs.
This feels almost like deja vu, because it wasn't Lyft like the most oversubscribed IPO ever. It almost feels like this is the same thing.
It's like they didn't learn anything from Lyft. I mean, Lyft cast a pall over the IPO market in theory for a couple of weeks, but they're ignoring that. It's going to explode because a lot of millennial type investors are buying into these now. There's an interesting statistic from E-Trade this morning. They opened up 155,000 new accounts in the quarter, which is double what they did last year. So there's a lot of participation from unsophisticated money coming into the market. And longer term, that's a warning sign. Short term, it's actually a positive because I think it'll spill over into the broader market.
From NASDAQ here, they said that Zoom will start trading approximately 10:20 this morning, and the Hookipa Pharma one, HOOK, will trade at approximately 10:45. So just for awareness there, if you are going to be trading these IPOs today, Marc, are you going to be participating at all?
No, anybody who buys the openings in these is going to see lower prices 2 to 3 weeks out. And you just can't buy these. The public is being set up for these big openings, and the pros are in and getting out. It's not a good thing for the public, in my view.
I mean, even on like the Lyft IPO, and I tweeted it out there was somebody that was selling 200,000 shares at the open at $1. Like somebody was just saying, I want out on that opening print no matter what. You could see that order, and obviously would have executed up at whatever it was, $88 when it opened up that day. And people would say, what is that person doing? That's a marketable limit, and saying, I'm getting out on this no matter what. It's probably somebody that picked it up at the underwritten price of 72. And they're saying, okay, I'll take 80, I'll take 81, I'll take 82, I'll take 85, I'll take 100, take whatever you get me. I'm taking the money and running. And you know what? That person was absolutely correct.
Very smart. You know who really got hit on the Lyft offering? I read a really interesting piece. They gave drivers bonuses so they could buy the stock.
Oh, no.
Yeah.
So people coming in, some of the drivers coming in and buying it, and obviously that's not good.
Well, it's 72 on the offering, but they're still looking at big losses here, so nobody's really happy with that one. Let's move on to some happy talk.
Well, I want to move still. We're going to stay unhappy for one more second. The rotation in this market has been wicked, and the rotation out of the drug stocks yesterday was just violent. You saw a stock like Merck, which typically moves 50 cents to $1 a day, lose almost 4 points. I don't know what the catalyst was that really started going, but the IBB was down $5. All your biotechs just got hit really hard yesterday. Anything to do with drugs and healthcare was getting rocked yesterday. And it's kind of a funny market because you look at the market and you think, oh, S&P is just slightly down, or kind of flat and not much happening. The rotation in the market was wicked yesterday. You saw some stocks, catching a bid, but other stocks going straight down. What do you make of all this rotation?
Well, the catalyst is pretty clear. It was United Health's CEO statement with their earnings report on Tuesday, where he basically said, the democratic socialist healthcare for all would destroy the healthcare system. And pretty much from a good report from United Health with better than expected numbers, suddenly it was Katie bar the door for the whole XLV complex. And of course, the ETFs accentuate the move on the downside because there's a lot of liquidation of the ETF or short selling, and then suddenly they've got to be selling all the stocks, the good and the bad. But it clearly links right to that United Health CEO statement on Tuesday. Before
where maybe it started and then it just kept rolling over because the XLV did have a bad day on the Tuesday. It had a worse day yesterday on the Wednesday. So it's been 2 days of straight down here for the XLV, obviously since, the UNH report there, which would have been Monday night or Tuesday morning. So ugly rotation there. But we did see some stocks getting, to pick up the market, pick us up a little bit here because we were depressing. We're talking about, we did see, some stocks catch a lift. Qualcomm was one that really caught a lift on a good verdict, but you also saw the semis showing life there a little bit again yesterday too. I mean, they did start to leak it at the end of the day, but a stock like Intel was up a couple bucks. I mean, and Apple itself, which obviously was down a little bit on the day before on the Qualcomm verdict, was up $3 yesterday too, is trading up here again. So you do see some life in some stocks too. It's like I said, the rotation is wicked right now.
Well, Apple clearly had a hard decision to make if they wanted to get into 5G and develop the chip themselves, count on Intel, who's not really very dialed in on 5G modems, or do the settlement. And Tim Cook has made it clear that he hates the whole business model of Qualcomm. He thinks it's blackmail, but they did what they had to do so that they could get to 5G in the marketplace this year instead of in 2 years. So Apple did a very pragmatic thing. The old Taiwan Semiconductor reported really poor numbers before the bell here today.
But bouncing back from the lows.
Well, that's good. So it'll be interesting to see how the other semis, the AMATs, the Lam Research, Intel, react to that. If they can weather that, then that tells you that any weakness in semis is already factored in, and they're moving in the opposite direction. They're moving up here.
What else is on your radar here, Mark? We got an option expiration, an early one here today, obviously with Good Friday tomorrow. What's on your radar here? What are your indicators showing? First, maybe just talk a little bit of the overall market, and then, if you see any sectors that, are standing out to you.
Still bullish on the market. 2,900 was always going to be a magnet price. We breached it, and that's good. 2,900, and this is sort of inside baseball, is the number where these quantitative strategies feel the pressure to maybe unwind some of the bullish strategies. So that's underlying the surface. They've got to really clear 2,900 dramatically to get out of the way of some of this risk on, risk off type trades. So I think we're going to new highs. I think we're going to get above 3,000, whether we do it in this earnings season or in July, don't know. But sectors are pretty clear to me. You want to avoid defensive sectors, so consumer staples and utilities, not interested. And maybe healthcare is now looking like the more traditional defensive sector that it's always been instead of a growth sector. On the positive side, financials, technology, home builders look really good. Breaking out to new highs. Pulte, I think, is the poster child for the group. And with lower mortgage rates, the job market's strong. Home builders are, if you can buy them, because they just don't dip, are a place to be.
We're on the line with Marc Chaikin of Chaikin Analytics. Joins the show every couple Thursdays to share his insights on the market. First, before I get to my question, DC1 wants your thoughts on Apple here, having a nice pre-earnings run. Any targets, any thoughts on Apple?
Well, our power gauge rating under the surface is bearish, but because it's in an uptrend, we've got a neutral rating, neutral minus. The analysts just haven't fallen in line with the price action. They're still cutting estimates. They're still cutting price targets. So I think Apple is setting themselves up for a bit of a potential disappointment, to the extent that you've had a huge move from 140 to north of 200, and they've got to really deliver the goods. Tim Cook hasn't been that good in these quarterly reports at articulating the growth story. They keep pushing the story out, kicking the can down the road, if you will, in terms of the music, the films, subscriptions in general. So they've got to really grab Wall Street to get the analysts to change. If they don't, then the earnings are a potential disappointment, just as they were in October.
And the whole streaming wars, that news from Disney last week propelled the stock, really not giving it back. AT&T, I mean, what do you favor here in the whole streaming sector? Netflix, wild day yesterday. I think you were leaning toward the short side in that one. I mean, when everything shakes out, I mean, who's going to be the winner here in the streaming wars?
Well, Disney's strategy is a longer-term strategy. Won't affect Netflix in the near term, which means in the next 12 months. So Netflix still has the opportunity to regroup. But my issue with Netflix is, and always has been, the high cost of producing the content and the need for financing on a sort of steady basis. I also look at the market making new highs, and Netflix hasn't even gotten above 380, which is the previous peak, and we're way down from the 420 level where they peaked in June and July last year. So I think Disney's a winner in general in content, as is Comcast, which is a much less aggressive play. It's a good play on Skyvision, which caused Wall Street to sort of back off, but that always happens when Comcast makes an acquisition. So I think Disney and Comcast are where you want to be for content. I'm highly skeptical of anything AT&T does. They've made more bad acquisitions. Think AOL,
DirecTV.
I don't believe in AT&T's ability to prosper in the digital ecosystem.
Right.
So they look good. They have a bullish power gauge rating. They have a high yield, but if you're going to bet on 1 to 3 year performance in this whole content space, I wouldn't bet on AT&T.
Mark, one more before we let you run here. We actually have not discussed any earnings this morning. Were there any reports from after the bell or this morning that you liked particularly?
Loved Honeywell's report. I mean, if there's ever a bellwether for the global economy, for industrials in general, Honeywell beat estimates at a time when the stock had rallied very sharply. I think that's a good sign for the market. They raised their full year forecast. This is positive stuff, and that's why we're sticking to our 3,000, 3,100 target for 2019 on the S&P.
All right, Marc Chaikin is the founder of Chaikin Analytics, joins the show every other week. Marc, thanks as always. Enjoy the nice long weekend, and we'll talk in a couple weeks.
Great holiday to everybody. Enjoy.
All right, have a good one. 8:28 now, guys.
Facebook, people are asking about Facebook here, and it's just bunching up here right at the highs of the move, getting ready to break out. I mean, you've had practically identical ranges here. I know it's harder with a $170, $180 stock, but let's just call 177, 176.87 was your 3-day low. It's just, it has someone that clean up here in the 180 handle. You've had 3 highs, 180.17, 180.50, 180.74, but just looks like it's just bunching up here, trying to break out, but 180 is keeping a cap on it. So you get over what this is called 181, a close over 181. I think you got another move higher here, but quiet consolidation. Major support at 177. I see a pair of lows there, also a lower in the 76 handle. So gearing up, but just can't go yet. Maybe needs an upgrade, or I think earnings or a little bit of ways away. But that's my take on Facebook. Dennis, anything on FB? I know you own it.
Yeah, I'm sticking with it. I've been in it for a long time, so I'm sticking with it. But just want to go to imbalances here. They're
Sure.
going to be interesting here. It is a third, equivalent to the third Friday with a Thursday. We're just getting them hot off the press. Let's take a look. Bank of America, 281,000 a sell. It's significant. Citigroup, 102,000 a sell. Morgan Stanley, 86,000 a sell. Morgan Stanley got downgraded today, so that might be a source of that imbalance.
Buying balances across the board.
No, they're sells.
Then what happened at 8:30? Do we have an
Well, you probably have a number.
Yeah, March retail sales. There we go. We got a pop.
Look at that.
Up at 6 1/4 here at the highs, coming up on the daily pivot at 29.0750. Wow, they popped it to 9 1/4 on that. Holy mackerel. Now backing off. So like in the March retail sales data, setting up here, higher open the last two sessions, Dennis, much higher opens, and they were faded hard. So we'll see if that scenario sets up again today. Just to pop there, 29.09 1/4. March retail sales estimate 1% increase, 1.6% increase. Are your retailers moving?
I'm not seeing much movement here on anything, to be honest with you. I know we popped 5 points on that, but we were already given 2 of it back.
Okay.
So we're up 2.5 points. I don't see much movement in the individual stocks. They're still waiting for more indications on what's going to be happening with the opening imbalances. I mean, we know they get wild on option expiration here. I don't see anything jumping out to me like, whoa, So no, I don't see the follow through here happening, at least not from imbalance land, and not in the individual stocks either. So, but it's still digesting that news. We had 1 million companies report here last night. Let's start with Team, TEAM. This stock is down $10. This stock put a hit on the cloud stocks last night. All the cloud stocks were trading lower in sympathy. If you look this morning, they are all still slightly down, not down as much as they were because the market has rallied, but Twilio is trading down 80 cents. ServiceNow, NOW, is down $3. Salesforce.com is trading slightly in the red. Workday is offered down. OKTA, Adobe, all the cloud stocks are down. Reason for that is TEAM. Spencer, couldn't have been a good report.
Yeah, well, they had a strong quarter, but their guidance was weak or in line across the board. So the Q3 EPS beat 21 cents versus 18 cents. The Q3 sales beat 309 versus 304 million dollars, but their Q4 EPS guidance was light, 16 cents versus 19 cents. Q4 sales guidance, they gave approximately $330 million versus so that was higher, 330 versus 327 million. The fiscal year EPS guidance was in line at 82 cents, and the fiscal year sales guidance was in line at $1.2 billion. So light fiscal year, a light Q4 EPS guidance is sort of the headline here to go with, essentially in lines across the board on the guidance.
Stock got hit, finding support in a very important area. I'd say $100. It's psychological. On the 4th of March, it got down to $99.77. 4 days later, you re-challenged that at $100.51. That's the level it needs to hold. It needs to hold $100.
It does, and the thing is that it's there, and it's not really bouncing. You know what I mean? You made a low under $100.
Yeah.
At 99.01, and I guess you're $2 off that. Real quiet though, very, very quiet range here. So it's important. It's important to hold that after hours low of 99.01. You went down to 99 1/4, and then the dailies are just sticking out there, right there too, right around the $100 area. So you may see some shorts coming in to cover here. I think the shorts would be natural buyers here if we started to go into a major decline. If they really want to take this out and whoop it good, then you could see 97.86 or 94.71. But it looks like they're just trying to bring in a little stock here, and I don't know. It's good to see. And we were talking about this a little bit on Skype yesterday, Dennis. Just the rotation here, and coming out of these high flyers, and and the cloud stocks, and it's got a little bit of that ZS that Sean had talked about for a while.
You're short that?
Yeah, I got a little bit on the short side. I played it once, and then it bounced, and then it hung around that 50% area. I think it was like 67.20, 67.30. Yeah. And I said, you know what? I'll give it a shot here, and it's come back down. big support for that one is the double bottom at the 61.5 area.
Important level.
Yep. And I think I think this is one of these stocks that, like, if you could punch it through 60 and people start seeing it in the 59 handle, they'll be like, oh my gosh, I got to get out of this. So that's what I'm looking for in that. You got a gap fill from earnings all the way down to 51.36. I don't think you're going to see that, but Dick's a little tired. We'll see what happens at 61.5.
This is a very important day for the market here because the rotation, like I said yesterday, was wicked. It's not a lot of days you see a stock like Merck lose $4.
Huge.
I mean, Merck in the last, and I own this one in my investment portfolio, in the last 10 days, Merck has lost 10 points. This is a stock that it lost its entire 3-month gain in 10 days. And not only that, like look at Pfizer, same story. It lost its entire yearly gains in the last 2 days. I mean, these are big moves. Pfizer, over a dollar move yesterday, is a huge move for a stock like Pfizer. And you look at the IBB and you look at the XBI, they just got crushed yesterday. So any type of rally here, you got people that are probably significantly underwater in these stocks, is going to be sold. So that sector looks broken. I mean, the biotech looks completely broken. Can they bounce? Sure. And maybe they do bounce a little bit, but there's overhead supply. Just like when we were talking UNH, a few days ago when they had the good earnings report. I don't care what the CEO was saying. All I cared about was you were rallying right into, old overhead supply, and the overhead supply comes in and the stock gets sold for 2 straight days. So, I mean, it's going to be a difficult road now it's going to be difficult for these stocks to rally significantly because so many people are underwater. So you've got that sector broken. You've got a lot of the cloud stocks that don't look nearly as healthy. Again, obviously TEAM is going to put, a little more heat on them today. So let's see how they respond. But then you have other stocks like Apple that are going straight up. And, really FANG has held up well. Facebook, like you were saying earlier, is consolidating, not going down. Amazon was up again yesterday. Netflix's own story because it had the earnings, but Google's making new highs again yesterday too. We talked about Intel making new highs.
Weird.
Yeah, there was some individual stock news. So it's just a wicked rotation here. You've lost some sectors altogether, yet other ones are picking up the slack, and that's why the market isn't going down. So you could say that's healthy, but when I see some of those stocks getting hit as hard as they were yesterday, it makes me nervous overall.
Yeah, I just think, and I was looking at this yesterday as well, because a lot of times when the market's weak and I get the S&Ps going through some significant levels, I'm thinking, man, I gotta be short the spy. And then you look at like Amazon. Okay, Apple's up $3, Amazon's up $10, Google's up $3. It's like, where the hell is the market gonna go with these stocks? And then also, I mean, no one talks about the super boring stocks, but like there's like just like an insatiable bid here in like Ford and GM. They don't go down.
The value trade is still on a little bit to a certain extent. And if you look, some of these stocks are getting hit yesterday. Yeah, some of them are lower multiples, but you are seeing a little bit of the, scrambling around looking for lower PE stocks too. Yeah. They were hitting everything with high PEs the last few days. We've been talking about that, and the cloud stocks, with their Ps are up there 80, 90. We're getting hit the hardest. And they were looking to buy, a little bit more value. It was clear yesterday morning, but then, they started hitting some of the other stuff too, like some of the, some of the biotechs that have lower multiples. So they hit everything drugs yesterday. So I guess it's not a good example. They were just hitting anything to do with drugs at all yesterday.
Right. And GM, which has just been a dog forever, flirting with staying over $40. Last few times it got over 40. I don't know what the yield is. And we never get, is Warren still pretty heavily into that? I know he's been in it for a while. I haven't looked at it. Yeah, he's been in it for a long time.
I know he was. He's still in, Spencer?
I don't know. I'll have to do a little.
The Pro has that pretty quick.
I can hunt it down real quickly. I don't know.
Yeah, it's in the Pro. So, okay, let's jump over, talk a few other stocks here this morning because there was a million earnings stocks. If there's one specifically you want to talk about, let us know because I'm just going to go through the main ones here. Las Vegas Sands reported last night, and it is up. It has leaked as well, though, and that's the one concerning thing is, these stocks, a lot of them had pretty good reports, and they were up, and then some are starting to leak again. So Las Vegas Sands down, too, or it's given back some of the gains because it was up at 72 area, and now it's trading the 69s.
The Q1 EPS 91 cents versus an 86 cent estimate. Sales of 3.65 versus $3.47 billion. So an EPS and sales beat for LVS in the first quarter, and I just checked. Warren is still in GM.
Thank you.
Yep.
Going back to this Las Vegas stand, it's going to have trouble at 70. There's just size in the book, and people who are buying at 72 last night, all excited. You got to somewhat respect the book, and you got to think, okay, you're going through a whole level that we've never been through before, because this is, or actually, I take that back. We haven't been through it in about a year. So obviously, Las Vegas Sands was higher at the beginning of last year, but it's been a long time since we've been up since the 70. So just logically thinking, you're probably going to have some size players there, and you do. There's 39,000 to sell at 70, another 22,000 to sell at 98, 69.98. So it's basically 60,000 shares, and then there's another 10,000 just below that, another 10,000 below that, another 7,000 below that. So really, you got about 80,000 shares worth of work from 69.65 up to 70. So it's not surprising that the pre-market traders, who are a little more savvy sometimes, because people just coming out after hours, they start looking at the books. The books aren't open after hours. People maybe don't know or don't remember. But when you look at it in the pre-market here, you think, it's going to struggle to get through this whole 69.70 to 70 area, and that's where it's offered. So I think the same thing. You look at this and you think, okay, well, if I short here pre-market, probably not open over 70. I kind of get a free look at the downside, obviously stopping out in the regular session if it takes out 70 though.
Pre-market high comes in at 71. You had a monthly high back in August of last year at 72.10. Harder to find resistance that is supported, except for the size that Dennis noted. Kind of like to see it maybe fall back. It's into yesterday's range, 68.24, 68.21 were the highs from the last two sessions. Your close is up there. So maybe you get some weak hands off the open and flush it down to unchanged, and then perhaps get it back up. But got to, as Dennis said, respect the size there at 70. Also, be careful in this one. If it takes out the size, goes 05 bid, and then you don't get 10 bid, and then it gets locked down at 70 again. Those buyers at 70 are going to be scrambling to hit it. So we'll see if it clears 70. Sure, take a look at that pre-market high 71, and then 72.10. I told you was the August of 2018 high.
Let's do American Express, widely followed stock, Dow component, stock trading down the pre-market. How'd they do, Mr. Israel?
Yeah, I thought this was supposed to report after the bells today, but maybe with the tomorrow being
I think a lot of them moved it up to the pre-market.
I think
yeah,
so.
There's actually I've only got one stock on my list now. It's due to report after the bell, and that's ISRG.
All right,
we'll talk about that.
Yeah, we'll have to hold our breath for that one. But the Q1 adjusted EPS for American Express, $2.01 versus $1.98 estimate. Sales of $10.36 versus $10.46 billion. So a slight EPS beat and a slight sales miss for AXP in their first quarter.
Stock trading down slightly here in the pre-market. It can be wild sometimes. American Express is a funny one, and I've traded on earnings a few times, and sometimes you'll see it lift, and then sometimes you'll see it really get wild too. Sometimes it can be sleepy. It's a very unpredictable stock off of earnings. So it's trading down $1 here, but don't be surprised if you do see some little wicked moves in American Express, because sometimes it can move pretty quickly on earnings.
They whacked it down to 109 even. Obviously, that was a little bit of...
That was last night, was it not?
Yeah.
You know what last night was? Fast Money. They got on there and they got bearish on it on Fast Money ahead of the report. And people got nervous and they started hitting it, because I looked at that and I was like, should I buy this? Because sometimes it gives you a little bit of an edge. I mean, the stock was 111.76. It's down to 109. So I'm like, even if they miss, is it going to go down to 109? People really, nervous last night off of Fast Money comments, and stock does do a little revenue miss. But if you would have been buying 109, 109.50, you're still up $1 on a revenue miss.
Oh man, I like the 109.50 area. That's just sticking out like a sore thumb to me. I see 3 lows right in that area. Make it 4 lows if you back up to April 4th. So I think that's excellent support. You're $1.35 above it. So I like that as support. And then you kind of been in a trading range from 109.5 to 112.5, really only to 112. So tight trading range, still within that trading range. I would keep an eye on the close, first of all. 111.76 is a potential resistance area. And then the high from yesterday at 112.50, all-time high here in AXP, up at 114.22.
Just jumping back to imbalances, just wanted to say, we know on the option expiration days, they're usually wild, and they were a lot of sells. Now they're actually a lot of buys. So it's flipping around. They could flip again here, so it's very difficult to trade off of this information on the third Friday, in this case, the third Thursday of the month, because we're trading like a third Friday. Market's flat and balances are wild, so it's really hard to get a feel for, where we're going today. I don't see any standout sectors either. Like, okay, well, this sector is going to be, besides the cloud stocks, which we already talked about, they might be a little bit weaker because of TEAM. I'm not seeing any real standouts here. I'd be cautious. A little bit, I'm seeing a little bit of a bounce in the drugs yesterday, but because they had such a wicked day yesterday to the downside, sometimes those bounces can get sold too. So I'd just be cautious if you're coming in and paying up, significantly for any of these drugs, because usually they give you a second chance.
Just to alert our audience here, like when the spoos pop like that, and when was asking Dennis, I'm like, Dennis, are the stocks, are the retail stocks, are things moving? And he was like, no, nothing's moving. Nothing, was getting bid up. Then you had a little bit of a fade off it. So the futures can just do strong. I mean, there might have been
it's all freely trading.
Yeah.
So, and people think, okay, well, the stocks, the futures are dictating, so stocks do whatever the futures do. It's not always the case. So it's a good point. I mean, stocks can be thicker, stocks can do their own thing. And a lot of times on the third Friday, you'll see the futures. I will go out and say that the stocks will typically lead the futures on a third Friday because there's so much big movement in the individual stocks. Sometimes the futures are leading, sometimes the stocks are leading. But for you futures traders out there that think that the futures lead all the time, it's wrong. I'm going to tell you wrong. It goes back and forth. Sometimes the futures are leading, sometimes the stocks are leading. Typically on the third Friday, there's so much information in the stocks that they will typically lead your futures. So the futures right now are probably looking for information from the stocks. Now you see a lot of buy and balance and you think, but again, they were all sell 10 minutes ago, so they could all flip to sell. So futures traders aren't going to be jumping on that information right now because they just watched them all flip, and they could flip again, and they know that. So you're not seeing like them grow. You're just seeing, a lot of flips. Now they're all heavy to the buy side, and maybe that's going to be the case, and maybe it's going to be a big up open here, but we don't know. We just don't have enough information yet. That's the key. When you're trading this stuff, it's all about information.
All right, can we just talk Brazil here a little bit? This STNE is getting hit. I see some news out this morning. Spencer, what do you have for us?
Yeah, they had a headline come out, I don't know, about an hour or so ago out of Brazil that, let's see if I can parse through this real quickly because I haven't really read it super closely, but Brazil will advance cash from merchants with less than 30 million in sales without charging interest. So that's seen as a negative for StoneCo.
All right, so this is a company-specific thing. I don't want to say, all Brazil. Brazil is up this morning. The stocks in Brazil are actually trading higher. You can go to EWZ, and you can see it's up 0.85%. So it's not like a spillover that Brazil's getting hit this morning. This is a company-specific thing. STNE is getting hit here. Also, PAGS is another one that's getting hit. So sector-specific news here. But big moves down here, 15% down in STNE, and this PAGS. I believe that PAGS is over there, isn't it? Is that the other one? And it's down 11%.
That's not a symbol.
PAGS.
Oh, PAGS. I heard I heard PHES.
That's okay. Brazil. That's the same. And so it's down. Yeah. It's down the same news. STNE and PAGS both getting hit on this. Down 15%, 11% respectively.
Yeah, PAGS, not PHES. Okay, got it.
Paul Alpha Golf Simon.
Got it. What about, actually, Joel, why don't you break down the StoneCo chart?
I was just looking at that one, trading at the lows of the pre-market session, trying to get a bounce here. So if you're one brave soul here, you do have a pair, let's call it 29, 28.88, 29.41. Those are your two lows. Let's just call it 29 even in there too. So you do have a buyer at 29 as we speak. I was looking on the dailies here, and 28, I think I could get a little bit more interested. You had a pair of lows on March 7th and March 8th on this one at 28. So that's an area trying to bounce off the pre-market low. Where the resistance is just a flip of a coin to me. I don't, if it gets a pop up, it just will be wherever the people bought it on the cheap want to get out on this one. But I see the major support at 28.
Let's go over. There are a number of earnings that we have not covered. If there are any that you want us to hit, throw them in the chat. But I want to talk about Snapchat real quickly for a second here, because they are getting a pair of downgrades this morning. Vertical Research and Wedbush both down. Well, actually, Wedbush is downgrade to neutral, vertical downgrade to negative on Snap.
Gave you so many chances to get out of this. I was long it. I was long it a few times, and the trend was beautiful. But then, it turned around and it kept getting up over 12 and just couldn't make new highs on the move. Now you get a couple analysts downgrading it. It looks broken. So this is one that I would not want to be in here right now. I would be a seller of rallies in SNAP. I think the top near-term top is in at 1263. And, the rotation too. I mean, we've been talking about they've been buying value and selling growth. They've been doing that for 3 days. Snap really wasn't participating here. It's going to participate today. It's down 4% with the pair of downgrades here. So yeah, it would have been lucky if you were just shorting it that they got the downgrades. But I mean, this looked like it was ready to roll over before the downgrades. So in some cases we like to say, okay, well, the analysts, are going against the grain here, and maybe I'm going to buy into this dip. This is one that I actually would not be buying into, and I would actually be looking at, if it got back up to 1150, 1160, potentially initiating a short.
Support, I could just give you support in this thing. You have not hit it in the pre-market yet. Pre-market low stands at 1122, but you just have a whole, I'm just looking at this for about, like, if I was short perspective, and you get under $11 and you have 1, 2, 3, 4, 5, 6, 7 lows right in that 1175 area, 1075 area. So I think if you do get under 11 today, you find some buyers longer term. I mean, it's just a support level, and could eventually chew through it. It's had a nice run, and I'm sure some people are going to be peeling out of it today. And let's see, on the upside, I don't think, maybe use 1150. Good call, Dennis. Your lows in the last 2 sessions, 1148 and 1152. So if you do get a quick pop up there, to that 1150, old support is going to be new resistance here in Snap.
All right, some tickers being thrown out in the chat here. Let's go to Chipotle here. See, I think they're reporting next week.
Chipotle got some positive commentary from Cowen, I believe it was today. I'm going from my memory, though, so don't quote me on that. But it did have positive analyst commentary here today, and that's why the stock is trading up $5 here. I know it was an ugly day yesterday. Sure, it looks broken to me now, too. So CMG, I think I would be a fader of the rally. It gets up near 700. I think it gives you a shot maybe again. Maybe you get up to yesterday's high, 699, 94. So I'm actually would be fading the analyst commentary here. So $700 I think is major resistance here now for the stock that's starting to roll over. And
trading up at the pre-market 693. You lost that $700 level. Yesterday's high right there, 699.94. Then you got a gap up to 705. So really needs to get back over 700 to reverse this trend. Earnings, I mean, if you had this thing going into earnings, I mean, one heck of a run. So I don't know if you want to ring the register on part of the position, but it can move anywhere. On a good or bad report, a lot probably depends on guidance. I mean, it's wonder when they're not in the news, and with negative news. I mean, stock has had a nice rally. It's been quite some time, so we'll keep an eye on that. I want to talk about Qualcomm a little bit, Dennis. We got a few questions on that, and it got up yesterday to 82.52. I don't know. I mean, I'm not going to short it or anything, but man, yeah. I think that high is going to be in there for a little bit. I mean,
it's such a move. You're talking about a stock that's thick, that moves 50 cents a dollar, moves 25 points in 2 days. It's why I rang the register way too early. I rang the register when it went up 13, 14. Obviously, I was a day too early, and I could have got a lot more out of it. Like I was saying on the show yesterday, I felt like it was almost a loser for me because I was long going into that news, and I sold near the close, and then rebought the close and tried to trade after hours and just didn't hold it well enough. So it didn't hold on to it well enough. It was still good. I made some money, but I left a lot on the table. And yeah, adds $2 to earnings. How much of that's priced in? I mean, it went up $25. I mean, okay, so it's kind of priced in. So $82, I agree, Joel. I think it was fully priced in.
And since that 82 is almost 4 sticks away right now, I'd keep an eye on 79.08. I mean, that's where the big boys, that's where the mark is, right? That's where it is on your statement. That's what you're going to be showing in your P&L. That's what the options are going to be priced at. So I'm going to move it down from 82.52 and let's make a new high close here. It's 79.08. I think the high close for the move. So that's my focus in that. Also, psychological number like 80, and the people that were just buying it on, just buy on Tuesday, just buy on Wednesday. Now it might be like, maybe I bought that a little bit too high. Maybe it's not going down 120.
Right.
I mean, we saw a reversal, and this is obviously a completely different story, but, some of those recent IPOs that were really taken off, like TIGR, obviously Kenny Glick was in that on our show from 18. It ran to 23, 2 days later. Look at the reversal day that thing had yesterday. So when these things start reversing, now, I'm not saying Qualcomm's not going to do something like that. It's a value trade, different type of trade. But TIGR, that's an incredible fall yesterday, and that's what I was talking about. They started selling, stuff with higher multiples or with the growth stuff, and TIGR hit hard yesterday. The other one, JMIA, hit hard yesterday. So obviously it was up, and had, but from those highs, it got to $49. It closed at 40. It's down 37 today. So you're talking about, that's why somebody asked us a question on JMIA, I believe yesterday, and I was like, these things are so hard to trade. So here you are, and it's having a pretty good morning. It goes up 49. Look how quickly the thing falls 25%. It's fallen 25% from the highs in a day, because we're at $37 here in the pre-market. I value my money too much to risk 25% in a day on just random technical moves. So that's why I'd stay away from this stuff. TIGR, same thing. You could chase it, and doing very well with it. If you didn't get out in time, it's difficult. I mean, you can have stops in there, and maybe that's the way to play it. It was 22, 21, 20, 19, 18, 17, 16. Trades on a 15 handle. It's $16, a little bounce here today, but think about it now. Now you're coming in. Now there's overhead supply like crazy. Everybody who bought it's going to be praying for their money back. So it's very difficult for these things to bounce back too. I think you get $18 in TIGR. You probably have sellers all over the place again. JMIA is going to be the same story. So these things are almost easier to trade after you get the first red candle, because now you got overhead supply. And you have people like in JMIA, you can look at this one and say, okay, well, they were maybe in it, and they're thinking, okay, well, maybe it'll bounce back for me, I get up to 45, I'll get out again. Now it's 37. So now you have people hoping for the close at 40. So now you think the path of least resistance for a stock like JMIA is actually lower.
Oh, sorry about that. I did the mute. I made it all the way to Thursday without the mute button on. I'd say
we'll forgive you.
JMI. I'd be looking for $34 here on the downside.
It could hit it, yeah.
Yep, 1826 to 1497. Roughly 30-point move there. Take half of that back. 34 easy peasy on this one. 33.10. That was your April 16 or just your low from
but going to be wild.
Yeah.
I mean, I don't have
how do you control your risk in something
it could go to 34. It could go 37. It could go up to 40 and then 34. I mean, it could do so many different things. All I can say is it's going to be a wild day again for it. I can't stomach it. That's why I don't trade this stuff. I mean, and I value my money too much. I've worked very hard, and I've worked for 20 years trading, nonstop. To just throw, money at something and hope it goes up 20% the next day. That's good. I hate being in the hope trade though. If you're in these things, I say speculative capital only.
You got a hold 39 in TradeWeb here. Similar scenario there. You went from 33.68.
Ugly.
Yeah, 44.25. About a 10-point move. You add 5 to that. Yesterday's low right here, 38.63. Trading at 38.80. Let's keep an eye on the close, 39.40. And then you don't have a number at 40, right? Because it's only been trading for a couple of weeks. But cycle out. I bought this off the IPO. I watched it go from 34 to 44. Well, now it's down. If I could get out at 40, I like to get out at 40. And then that way, you get a lot of other people thinking that, and that's how you come up with these psychological levels. So 41.27, that was yesterday. So I'm sure a lot of people would like to see that. High, all-time closing high, 42.33. A lot of people bought on that first day, 32 million shares. Yeah. And then it's been dwindling here. So maybe just running out of buyers.
What's interesting is Lyft had the good day yesterday, and it's almost like rotation within the recent IPOs. The ones that were hot became cold, and Lyft has its first good day in a while on a day where all the other IPOs get hit. I don't think that's a coincidence. I think
it's just thought.
Rotation within the IPOs themselves.
Hold that thought for a couple hours, and then then think about it, because we're getting 5 IPOs today.
We're getting a lot of them. So, okay, give the rundown quickly, the next minute, because we're running out of time.
Pinterest, Zoom.
Give us the symbols, too.
Okay, here we go. I'm pulling up right now. PINS is Pinterest. ZM is Zoom. And now my internet's being slow. So there's a biotech one. Ticker is Hook, HOOK.
Oh.
And hold on one second here. There's 2 more. Give me 1 second to bring them up. There we go.
Be a biotech IPO today after yesterday's biotech.
Yeah,
right?
Greenlane.
Cancel.
Greenlane, GNLN, and Brigham Materials, MNRL. Those are our
IPO
5 IPOs set to trade today.
They are heavy to the buy side. So futures traders jumping in here now and saying we want to own stocks. The imbalances are all heavy to the buy side right now. So I'm not even going to give them out because they're all big buy. And that's why we just saw the lift here in the futures, because they all went huge buy.
All right. And on that note, that's going to be a wrap for this week's show. So thanks to everyone who joined us. Thanks to our guest, Marc Chaikin. Please remember, all the information from our show is for informational purposes only, not meant to be investing advice. Everyone have a good rest of your day and enjoy the long weekend. Those of you celebrating the holiday, have a great Good Friday. We'll be back with you on Monday. Have a good one.